Okay, something really strange is happening in the financial markets right now. Gold, the ultimate safe haven asset, is absolutely soaring to record highs. But here's the weird part. So are risky stocks. Now, this just shouldn't be happening. It's a paradox that has even the experts scratching their heads. So what on earth is really going on? Right, let's dive straight into this weirdness. It feels like the market is telling two completely different, totally contradictory stories at the exact same time. And that's creating this major puzzle that we really need to unravel. So think about it like this. Normally, the financial world works like a seesaw. When the economy's booming and everyone's optimistic, they pile into risk-on assets, like stocks. But when things look shaky, maybe a recession is on the horizon, they run for cover to risk-off assets like gold. Simple, right? One goes up, the other goes down. But right now, both sides of the seesaw are way up in the air. Both stocks and gold are hitting all-time highs. How is that even possible? So you have to ask, what could be powerful enough to just break this fundamental rule of the market? Why are the confident investors and the super cautious savers both winning at the same time? Well, the real answer goes a lot deeper than the usual explanations you hear. Now, the first thing everyone points to is inflation. And look, it's a logical guess. Gold has always been that classic shield against rising prices. But in this case, that's just a tiny piece of a much, much bigger puzzle. Sure, inflation is a factor. Of course it is. But the sheer scale of this rally, with both the stock market and gold smashing records at the same time, that points to something else. It points to a profound structural shift happening just beneath the surface. Trust me, this is bigger than just inflation. And that brings us to the real driver. There's this powerful, almost silent trend that some folks are starting to call a monetary prenup. And it's a huge strategic move being made by some of the biggest financial players on the entire planet. This quote right here gets to the absolute heart of it. This isn't about you or me getting nervous and buying a gold coin. No, this is about entire countries quietly losing faith in the US dollar. They're rattled by everything from the soaring US debt to the way the dollar's been used for sanctions, and now they are actively looking for an alternative. And that brings us to the main character in this story, and it's not your average investor. The incredible demand that's driving these record prices, it's coming from the central banks of countries all over the world. These guys are the whales in this market, and believe me, their moves are making massive waves. And the numbers are just staggering. In the last few years, central banks have been snapping up over 1,000 tons of gold every single year. This isn't some random blip on the radar. This is a deliberate, historic shift in global financial strategy. Look at this. Before 2022, central bank gold buying was, it was steady, pretty predictable. Then, everything changed. In 2022, their buying just skyrocketed. In 2023, it was even bigger. This is a sustained, strategic buying spree on a scale we have not seen in over half a century. So let's talk about this monetary prenup. Think of it this way. For decades, the world has basically been in a financial marriage with the US dollar. It was the foundation of, everything. But now it seems like a lot of the world's central banks are quietly preparing for a potential separation. They're stocking up on a neutral asset, gold, just in case that long-standing relationship goes sour. So what does all this actually mean? If the world's most powerful financial institutions are actively planning for a future that's less reliant on the dollar, what could that future possibly look like for the rest of us? At the end of the day, actions speak way louder than words. While diplomats might be saying one thing, the balance sheets of the world's central banks are sending a very different, very clear message. It is a quiet vote of no confidence in the long-term, unchallenged dominance of the US dollar. The chain of events here is actually pretty clear and logical. It starts with this creeping loss of faith in the dollar as the ultimate safe asset. That leads to a very real, tangible action, buying absolutely massive amounts of gold. And that action, when it's sustained over years, could be the first tremor of a fundamental reordering of global finance as we know it. So is this whole gold paradox just a weird market quirk, or is it a sign of something much, much bigger? A symptom of a monumental shift in global power? Really, you have to wonder, are we watching the beginning of the end for the dollar's long reign?